Hey guys, so in this video we will show you the best time frame for swing trading and for finding key support and resistance levels. Also make sure to hit the subscribe button and to turn on the notifications bell so that you know exactly when new content is released. So from looking at the comments, a question that is asked over and over again from the last video is, what is the best time frame for swing trading and for identifying support and resistance levels? Also, right now, comment below on what topics you want us to cover so that we know what you want and we'll work our best to create those videos for you. So here on the Aussie Swiss daily time frame, as you can recall from the last episode, we broke down how to identify support and resistance levels. And as a side note, our videos are designed in a linear fashion, meaning this video right now builds on top of all past videos. So make sure that you are all caught up so that you understand exactly what we are talking about. So again, here on the daily time frame, you will most likely spot support and resistance everywhere. You have a level up here. You have a level here. Another level here. Another level. And another level. So the problem with drawing in this many lines on the chart is that you have now confused yourself and have cluttered up your chart with lines everywhere. Some of these levels are useful for day trading, but right now our focus is on swing trading. Again, if you can recall from the last video, we want to keep our charts simple and clean. So this is why we use the weekly time frame to find our key levels instead of drawing in all these minor daily levels. So let's jump to the weekly and break this down. Now, here in the weekly time frame, notice how the support and resistance levels you drew in from the daily are not visible on the weekly. So let's go ahead and remove all these daily levels. So here's the key to identifying your dynamic support and resistance levels. Look for levels of support and resistance that are obvious and visible on the weekly time frame. Notice how we have an obvious swing high up here, so we draw it in. Next to the right, another level of resistance, so we draw it in. And along the bottom, we have an obvious level of support. And here are all your dynamic levels. The reason the weekly time frame is important is because you are seeing the big picture, as each candle holds a lot more information and represents all the buying and selling that occurred throughout an entire week. So this is a very key point. You need to understand swing trading before you can understand day trading, as you need to know what is occurring on the big picture and bigger trends in order to understand how to trade the shorter time frames and smaller trends so that you don't get caught. Now let's do this from the top down again on another pair. So here's the pound yen. And again, starting from the weekly time frame, we want to identify our key weekly levels. Along the top, we first spot this obvious level of resistance, so we draw it in. Next, we spot this level here with multiple rejections, so we draw it in. Along the bottom, we have an obvious level here. And finally, another swing low down here. So these are all your key support and resistance levels, meaning the obvious levels that you can spot on the weekly time frame. And now we jump to the daily time frame to further confirm these levels. Here in the daily, you can now see more clearly where the key levels are that we drew in on the weekly. And now all the other levels you can spot on the daily are minor levels. So again, spot your key levels on the weekly, confirm the same levels on the daily, and then look for price action on the daily for possible trade entries at these levels. We will dive deeper into price action entries in an upcoming video, but right now, Focus on identifying your key levels on the weekly and using the daily for confirmation and price action entries. So let's do this again on another pair. Here's the pound Aussie, and again starting from the weekly time frame. Along the top, we have this obvious level here, so we draw it in. Moving on down, we have this next level here with multiple rejections, so we draw it in. Again, we spot this level here with multiple rejections, so we draw it in. And finally along the bottom, and swing low with multiple rejections. Plus, we also have our trend line here that connects all the swing lows of this uptrend. Now that we have all our key levels identified on the weekly, let's jump to the daily time frame to confirm these levels. So here in the daily, you can again see how the key levels you drew in on the weekly fall into place on the daily, and leaving out all the minor levels so that you don't confuse yourself. Price is currently pulling back to this key weekly support level here, which is also where the trend line lines up perfectly. So if we get good price action through this candle close, followed by intraday confirmation, there will be a possible trade entry long. Again, we will discuss price action entries in another episode. Now, before we continue, if you're enjoying this video and want us to continue to make more videos week after week, please hit the thumbs up button and also leave some comments below with your thoughts as well as what kind of videos you want to see. Now, we're going to show you a bonus technique through using the monthly time frame. So let's jump to that. So you can also use the monthly time frame to spot key levels as well. Using the monthly time frame to identify key levels isn't a must, because often, since the monthly is such a large time frame to use, you won't be able to always spot levels. But we're going to show you this technique anyways, so that you can use it if you choose. So here in the pound Swiss monthly time frame, we often find that monthly levels can hold more weight to them if used correctly. Also, when you jump between time frames, you'll forget where the level of support or resistance came from. So to solve this, we'll make the monthly support and resistance levels a certain color, in this case green, and then the weekly level will be a different color. Again, starting from the top, we spot this obvious level up here, so we draw it in. Next, we spot this level here, so we draw it in. Moving on down, another level with multiple rejections, so we draw it in. And then the swing low with multiple rejections, so another level. So here we have all the monthly levels drawn in, and we jump to the weekly to further confirm these levels. Now here in the weekly time frame, you can see how the monthly levels fit in. We also have this weekly level here, so we draw it in. Notice how price recently blew right through this weekly level and tapped the monthly level and snapped right back, causing this wick to form. Now I'm going to show you how this played out on the daily. So here in the daily, this was your weekly level we just identified, and this here is your monthly level. Price came down to this weekly level, but no price action occurred, and all we had was this bearish momentum candle that blew right through. Price then continued down to this monthly support level, which is when we finally had a reaction to the level through the wick sticking out. Now you can take this even a step further through using the 4-hour time frame to further confirm this candle. So let's jump to that. So here in the 4-hour time frame, You had this decent rejection candle of the monthly support, followed by an inside bar, which is a reversal pattern. Now, there were many ways you could have entered on this, which we will go through in a following video. Most traders use support and resistance incorrectly. So if you enjoyed this video and want us to continue to make more videos, make sure to hit the thumbs up button. And also in the comment section, let us know your thoughts and what kind of topics you want us to cover next. And we'll work our best to create those videos for you. So thanks for watching, and I'll see you in the next episode.